Assalamualaikum. We are from Group 10 want to present about the financial statement analysis for sector of real estate investment trust, and the two companies that we are choose are the KLCCP Tablet Group and Land Lease Group. My name is Iqbal Hakim bin Abdul Hafiz. My team member name is Nur Hayati Ishak 048297, Siti Nur Jamilah binti Amaluddin 048191, Nur Hikhmah binti Rizal Harahap 048079, and Nur Iffah Nasuha binti Kamaruzzaman 048522. Executive Summary. This report prepared by our group to study further about the financial statement analysis. This understanding for overall report can be obtained through the analysis and evaluation of the current and prospective profitability, liquidity, solvency, efficiency, and the market ratio in the final statement of annual reports of land lease and KLCCP template groups. Calculation for all ratio in land lease and KLCCP template group can be found in the report. The profitability, the ratio that being used and calculated are gross profit margin, operation profit margin, and net profit margin, while the ratio used in liquidity ratio are current ratio, asset test ratio, inventory turnover ratio, account receivable turnover ratio, and account payable turnover ratio. For leverage ratio, it is calculated for debt ratio and interest cover ratio, whereas earning per share, return on capital employed, return on asset, and return on equity is used for efficient ratio. Market ratio include the price earning ratio. Two approach which are time series and cross-sectional analysis is used in this report to better analysis the firm performance.
The introduction. Analysis of the company's financial ratios is very important for a potential investor to determine how much investment can be given. From the results of the analysis, it also can be used as a reference for business development. So, what exactly is the analysis of financial ratios and how do they function? According to Harvard Indo 2010, the ratio is one number compared to the other numbers as a relationship. Jonathan Golin 2001 argues that the ratio is a number depicted in a pattern compared to the other patterns and expressed as a percentage. While finance is something related to accounting such as financial management and financial reports. So, the financial ratio is an index that connects two accounting numbers and is obtained by dividing one number by another. James Carter Van Home quoted from Kashmir 2008. After knowing the meaning of financial ratios, the analysis is an attempt to observe in detail on a thing or object by outlining its constituent components or compiling these components for further study. Analysis can also be called a process to break something into deeper parts and unite with one another. So, financial ratio analysis is the process of observing indexes related to accounting on financial statements such as balance sheet, income statements, and cash flow statements with the aim of assessing the financial performance of a company.
Background of company. KLCC Tablet Groups, a property company to Malaysia large real estate investments trust and the country's only tablet security comprising KLCC Property Holding Berhad and KLCC REITs. KLCCP's tablet groups represent a diversified office focused REIT comprising 5 Grade A office which include the nation iconic landmark, the Petronas Twin Tower, a premium retail malls, and a leisurely hotel. Tragically calling located in the heart of Kuala Lumpur city centre, the 100 Arts KLCC development embodies Malaysia's strengths and growth in the nucleus of city. Dato Ahmad Nizam bin Saleh had been the chairman of KLCCP Tablet Group since 2019 until now. Their principles is to create place people look forward to progressing lifestyle for suitable future and share value, innovative, trend-setting mentality through the creation of new products, ideas and way of doing. Choosiveness united in the purpose and fellowship, loyalty to corporation and nations, integrity, honest and upright, and professionalism, committed, proactive, and always striving for excellence. KLCC REIT is an Islamic real estate investment trust established to own and invest primarily in Sharia-compliant real estate for office and retail purpose. Background of company Land Lease Group. The company was founded by Dick Dusdorp in 1958 to provide financing for construction contracts executed by civil and civic. The company acquired civil and civic from Brother Osbauer Batteries in 1961. Lendlease expanded their operation into America in 1970. While Lendlease also created the Lendlease Foundation, their charitable arm to improve communication with and help in communities as well as care for both community and employer well-being in 1983. In more than 40 countries, companies operate around the world. Headquarters of Lendlease in Sydney are located in 4 operating regions, which is in Australia, Europa, the Americas and Asia. On top of that, the Lendlease Project Management and Construction Division manage and construct large building projects. Besides, the company also operates additional business in certain markets. It is including apartment development, greenfield resident development, unlisted real estate fund investment, real estate management, real estate sale and leasing, public-private partnership, infrastructure development, and business capital investment in innovative technology.
Is Nur Hayati Binti Ishak 048297. I would like to explain about the time series analysis from 2015 to 2019 and the cross-sectional analysis. So, first is the profitability ratio. You can see the graph of gross profit margin. Based on the graph, the time series analysis of the gross profit margin from 2015 to 2018 has been fluctuating over the past 5 years. From 2015 to 2018, the trend showing a decline in the ratio. This is because of the declining revenue relative to sales volume or higher cost of goods sold to produce goods. Hence, performance management actions need to be made by the management, such as remove unprofitable products and services. Fortunately, the situation of the firm is improved because the ratio is increasing in 2019. By analyzing all the gross profit margin of Lendlease Group from 2015 to 2019, ratio has been decreasing over the past 5 years. The ratio has been decreased because of declining revenue relative to sales volume. So the management need to make a review on the current pricing structure. Now, I would like to explain the cross-sectional analysis for gross profit margin. In 2015, the best company is KLCCP Tablet Group with a ratio of 84.93% if compared with Lendlease, which its ratio is 12.56%. Next, in In 2016, KLCCP has the higher ratio than land lease, which is 84.57% compared to 11.27% of land lease ratio that shows inefficient sales made in its firm. In 2017, KLCCP is recorded the higher ratio than land lease, which the KLCCP ratio is 83.91%, while land lease ratio is 10.91% in that year. In 2008, KLCCP has made more sales revenue and obtained a better gross profit ratio, which is 82.87% when comparing the ratio of land lease, which is 9.17%. Lastly, for the year 2019, the best company is KLCCP. This is based on the gross profit margin of KLCCP and land lease, which is 83.19% and 6.65% respectively. Is for the operating profit margin. So the time series for the operating profit margin, based on the graph, the ratio of KLCCP has been decreasing over the year 2015 to 2019. The trend of operating profit margin ratio shows that the situation of the firm has worsened over the past years. The firm management is facing a poor management improvement and need to bear an increase in operating expenses. Hence, these worse situations need to be improved by increasing the price of goods and services. Based on the graph, the operating profit margin of land lease has been fluctuating over the year 2015 to 2019. From 2015 to 2016, it shows a decline in ratio, but in 2019, the ratio is starting to increase from 2017 to 2018. Unfortunately, the ratio declining again in the following year of 2019. This means the management of the firm facing a decrease in sales in 2015, 2016, and 2019. Hence, this situation need to be solved and improved by streamlining the firm's operations and reduce the operating expenses. Next, the cross-sectional analysis between KLCCP and land lease in terms of operating profit margin. In 2015, the best company is KLCCP's tablet group with 74.93% of operating profit margin if compared with land lease, which is 6.53%. It shows that KLCCP has achieved a better sales growth than land lease. Next, in 2016, KLCCP has the higher ratio than land lease, which is 74.38%. Land lease with 5.44% of operating profit margin ratio shows inefficient sales met to cover the operating expenses in its firm. In 2017, KLCCP's tablet group is recorded the higher ratio than land lease again with the operating profit ratio of 73.15%. Land lease record a low ratio of 6.62% in that year. In 2019, KLCCP has obtained a better operating profit ratio than land lease, which its ratio is 71.9% compared to 6.87%. Lastly, in 2019, the best company is KLCCP because the ratio of KLCCP and land lease are 71.68% and 4.5% respectively. For the net profit margin, the net profit KLCCP over the past 5 years is fluctuating. From 2015 to 2018, the trend showing a decline in the net profit margin ratio. The alternative to have a better ratio is needed by the firm management to be able in controlling its cost effectively and pricing the goods at high price. Surprisingly, the ratio was improved in 2019 because the ratio is increasing. For the time analysis, in land lease margin over the past 5 years is fluctuating. It can be seen from 2015 to 2016, the ratio is decreasing. Then the net profit margin ratio indicate the incremental in ratio is obtained from 2017 to 2018. It shows that the firm converting the sales into actual profit very efficiently. Hence, in 2019, the ratio is declining very rapidly. Hence, Hence, the firm need to analyze the net profit margin, then increase the prices and selling more goods to generate more net profit before tax. For the cross-sectional analysis in terms of net profit margin, in 2015, the best company is KLCCP with 113.29% of net profit margin if compared with land lease, which its ratio is 5.78%. It shows that KLCCP has achieved a better ratio than a land lease. Next, in 2016, KLCCP has the higher ratio, which is 82.07% of net profit margin than land lease, which its ratio is 5.72%. In 2017, KLCCP is record the higher ratio of 81.6% than land lease, which is 6.04% in that year. In 2018, KLCCP ratio of 68.57% is better than land lease, which is 6.44% of net profit margin. Lastly, in 2019, the best company is KLCCP again, because the net profit margin of KLCCP and land lease are 75.28% and 3.75% respectively.
Assalamualaikum warahmatullahi wabarakatuh. I am Nasuha Binti Kamaruzzaman 048522. I am going to present about the cross-sectional liquidity ratio for both company, which is a KLCCP staple group and land lease group for 5 years, which is 2015 to 2019. Okay, for current ratio is a liquidity ratio that measures whether a firm has enough resources to meet its short-term obligation. It's compare a firm's current asset to its current liabilities. The current ratio is an indication of a firm's liquidity. From the graph, we can see that KLCCP staple group have a better current ratio compared to land lease group, even though KLCCP staple group have a decreasing in 2016 and in 2018, but their current ratio still show up to 1.2 times, which is the lowest ratio in the 5 year, but they still manage to maintain the current ratio not below than 1, which is good because their current liabilities is not exceed their current asset. For land lease group, their current ratio for the 5 years straight is below than 1. A current ratio of less than 1 indicates that the company may have problems meeting its short-term obligation. So, here we can see that KLCCP staple group have a better current ratio compared to the land lease group. Okay, next for acid test ratio. Acid test ratio, also known as quit test ratio. Quit test ratio is also a type of a liquidity ratio which measures the ability of a company to use its near cash or quick asset to extinguish or retire its current liabilities immediately. The acid test ratio is similar to the current ratio, but provides a more conservative assessment of the liquidity position of firms, as it excludes inventory which is thus not considered as sufficiently liquid. From the graph, we can see that land lease group has a quit ratio less than 1 for 5 years straight. A company with a quit ratio of less than 1 cannot currently fully pay back its current liabilities, while the KLCCP staple group has a quit ratio more than 1. It shows that the KLCCP staple group have a better ability to pay back their current liabilities. Okay, next for the inventory turnover ratio. Inventory turnover ratio is a measure of the number of times inventory is sold or used in a time period such as a year. It is calculated to see if a business has an excessive inventory in comparison to its sale level. From the graph, we can see that KLCCP staple group have a very high inventory turnover ratio compared to the land lease group. A low turnover rate may point to overstocking, obsolescence, or deficiency in the product line or marketing effort. However, in some instances, a low rate may be appropriate, such as where higher inventory level occur in anticipation of rapidly rising prices or expected market shortage. Conversely, a high turnover rate may indicate inadequate inventory level, which may lead to a loss in a business as the inventory is too low. This often can result in stock shortage. So maybe for this, land lease group have a better inventory turnover ratio compared to KLCCP staple group. Okay, next for the cash ratio. Cash ratio is one of the three common ways to evaluate a company's liquidity. It used to measure its ability to pay off its short-term debt, but only use cash and cash equivalent. From the graph, we can see that KLCCP staple group have a better cash ratio, which is up to 3.33 times in 2015, which is the highest, and they still manage their lowest cash ratio not below than 1 in 2018. Meanwhile, for land lease group, their cash ratio is less than 1 for 5 years straight. So, in cash ratio, KLCCP staple group is better than land lease group.
Leverage ratio. Debt ratio is one of the leverage ratio. Debt ratio is financial ratio that measures the extent of the company's leverage. The debt ratio is defined as a ratio of total debt to total asset. In other words, this shows how many assets the company must have in order to pay all its liabilities. It can be interpreted as the proportion of company's assets that are financed by debt. Okay, from this graph, we can see that uh, for KSCCP separate group, the figure is very consistent. It's just 0.17 on 2015. Same goes to 2016, and it's dropped to 0.15 on 2017 and 2018, but it's increased by 0.01 on 2019. But for land lease, is not consistent. Okay, now we want to know which company is better. We must know that the more higher, the more lower of bad debt figure of the ratio is more better for debt ratio. So here KICCP separate group is more better than in this group. Interest coverage ratio. The interest coverage ratio measures how many times a company can cover its current interest payment with its available earnings. In other words, it measures the margin of safety a company has to paying interest on its debt during a given period. The interest coverage ratio is used to determine how easily a company can pay their interest expenses on outstanding balance. The ratio is calculated by dividing a company earning before tax and interest by the company interest expenses for the same period. The lower the ratio is, the more the company is burdened by the tax expenses. It's mean the more lower is bad for the company lah. We can see that they had their point of close on this graph. We can see KCCP staple group is better than land lease group because KCCP staple group ratio is increased steady, but for land lease group the flow is not consistent. When 2019 is the lower for land lease group but the higher for KCCP staple group. In 2018 it is the higher for land lease group, while 2015 is the lowest for the CP stapler group. For efficiency ratio analysis, first, earning per share. Earning per share is the portion of a company's profit that is allocated to every individual share of the stock. It is a term that is of much importance to investors and people who trade in the stock market. The higher the earning per share of a company, the better is its profitability. For an investor who is primarily interested in a steady source of income, the EPS ratio can tell him or her that the room of company has increasing in existing dividend. Although EPS is very important and critical tool for investor, it should not be looked at in isolation. EPS of a company should always be considered in relation to other companies in order to make a more informed and prudent investment decision. So, from this graph, I will recommend for investors to invest in land lease group, but a little bit worried because on 2019 the earning per ratio is dropped, but is still higher than KCCP staple group earning per return on capital employed. ROCE is a financial ratio that can be used in assessing a company's profitability and capital efficiency. In other words, the ratio can help to understand how well a company is generating profit from its capital. For a company, ROCE trend over the year can also be an important indicator of their performance. In general, investors tend to favor companies with stable and rising ROCE levels over companies where ROCE is volatile over or trending over. We can see for the both companies is not consistent. It's hard to say which one is better, but every year for KSCCP group is rising, what is dropped when 2019 is same goes to Landless group because for both companies it's dropped when 2019. Ratio in efficiency ratio analysis is return on equity. ROE is a measure of financial performance calculated by dividing net income by shareholders' equity. because shareholders' equity is equal to company's asset minus its debt or liability. ROE is considered the return of net asset. ROE is considered a measure of how effectively management is using a company's asset to create profit. As with the return on capital, ROE is measure of the management's ability to generate income from the equity available. ROE is also a factor in the stock valuation and associated with other financial ratio. Okay, from this graph, we can see that for land lease group, we can see from 2015 until 2018, very consistent, but it's dropped on 2019. For CCP tablet group, it's very not consistent, but from 2018 to 2019, it increased, but not too much. It's still below than 2015. 2015.
So, based on the graph, the ratios of price earning from 2015 to 2019 is fluctuating over the past 5 periods. This is for the time series analysis. From 2015 to 2016, the trend showing an incremental in ratio. For both years, it showed that the price of share is high relative to earnings and possibly overvalued. In 2017, price earning ratio is decreasing. That indicate that KLCCP shares may currently be undervalued. The price earning ratio is increasing drastically in 2018 because the low of interest rate opened a greater opportunity for higher real earnings growth, increasing the amount people will pay for the company's earnings. But in 2019, the ratio declining due to the undervalued shares again. Next, the time series analysis for the land lease. We can see from the graph, the earnings ratio from 2015 to 2019 was declining from 2015 to 2017, but starting to increase in ratio from year 2018 to 2019. This is due to the share that may currently be undervalued. It also indicates that the current share price is low relative to earnings in 2018 and 2019, shows an incremental in ratio. For the cross-sectional analysis, on the graph, it shows the price earning ratio from KLCCP and land lease from year 2015 to 2019. Since the companies look for value of share, the best firm that achieve a low price earning ratio is KLCCP with 1.59 of price earning ratio in 2015. That company maintained a good value of shares if compared with a land lease, which its price earning ratio is 14.79 times. Next, in 2016, KSCP has the lower ratio, which is 2.04 of price earnings ratio than land lease. This is because land lease with a ratio of 11.2 times shows a high expectation among investors for future growth. In 2017, KLCCP is recorded the lower ratio than land lease, again with the price earnings ratio of 2.06. Land lease recorded a high ratio by obtaining 10.55 of price earnings ratio in that year. In 2018, KLCCP had remained a good share value than land lease. Hence, it indicates that the best company is KLCCP with 2.49 of price earning ratio when comparing the price earning ratio of land lease, which is 12.7. Lastly, for the year 2019, the best company is KLCCP. This is because the price earning ratio of KLCCP and land lease is 2.28 and 22.21 respectively.
Ratio.
Conclusion. This financial statement analysis explores the financial statements of KLCCP's Tablet Group and Land Lease Group in the 5 years, which is from 2015 to 2019. In addition to analyzing these financial statements, the report also discusses relationships between the result of their financial analysis ratio and the company's performance in the time series analysis. Furthermore, this report compares the performance of the two companies by using cross-sectional analysis too. So, after all the findings, it is concluded that financial ratios are the basic and most important part of any business. It describes the company's financial position. It is because by analyzing the previous concepts and financial ratios, it will help the organizations like KLCCP Startup Group and Landlist Group to understand their financial position. It is compulsory that constant monitoring of financial statement is conducted. So, organizations that conduct analysis allow for the operation to have a snapshot view of the overall performance and give management a chance to make some financial decisions. So, as the data indicates that Landlist Group is an international company and has expanded its business on the large geographical area, but on the other side, KLCCP Startup Group is the local company and it is the largest REIT in Malaysia. So from the financial statement analysis, it is appealing that the financial position of the KLCCP Startup Group is better than Landlist Group in profitability ratios, liquidity ratios, and leverage ratios, as it is the local company comparing to the international company. So, KLCCP Startup Group is less risk than Landlist Group. However, for the efficiency ratios, the Landlist Group is better than KLCCP Startup Group. So, Landlist Group gives more return because it gains more profit than KLCCP Startup Group. So, in my opinion, Landlist Group can make more profit because they can invest in large geographical area. On the other hand, KLCCP Startup Group deals with the limited geographical area, which it is only invest in Malaysia. But on the basis of financial ratios, it has a better financial position and also has an opportunity to expand its business. So in a nutshell, both the companies have some opportunities and threats and they need to work on it. Okay, that's all from us. Thank you.